Welcome to Swanson Reed's presentation on the exclusion of gambling and tobacco activities under the Research and Development Tax Incentive. At the time of collating this presentation, the proposed exclusion has not yet been enacted as law. However, the expectation is that it will be. This exclusion was announced as government policy in December 2023, and then draft legislation was released for consultation in December 2025. The explanatory memorandum notes that R&D activities related to gambling can exacerbate addiction and associated harms, and activities related to tobacco can increase health risks. Excluding these activities is in order to ensure the government is not subsidising this type of R&D through the program. Where activities are solely for the purpose of harm reduction, such as reducing addiction, these activities remain eligible to receive support. While there are a number of already excluded activities under the R&D tax legislation, such as social sciences and mineral exploration, this is the first time the Australian government has looked to actively exclude activities based on harm aversion or policy type reasons. The government's exposure draft of the proposed legislative changes was released in December 2025, which will be a large focus of this presentation. Within the presentation, we'll discuss the background and context of how this proposed exclusion came about and what has occurred so far, what legislative changes are proposed and what this means in the context of R&D activities, a case study provided by the government, and then next steps, both from the perspective of the legislation and of companies seeking to claim the R&D tax incentive that might be impacted by this exclusion. So, let's dive in. In December 2024, the government released their mid-year economic and fiscal outlook, and within it announced that they will exclude activities related to gambling and tobacco from the R&D tax incentive eligibility. The proposed exclusion is to come into effect for income years starting on or after 1 July 2025. The origins of this measure can perhaps be traced back to the release of the R&D Transparency Report in September 2024, and then the subsequent media scrutiny highlighting large claims by gambling technology companies. In December 2025, the government released an exposure draft titled Treasury Laws Amendment Bill 2025, Exclusion of Tobacco and Gambling-Related Activities from the Research and Development Tax Incentive, which outlines the change to the tax law that would enact the proposed exclusion. It's important to note that this exposure draft is just a draft for the purpose of consultation. Following consultation and any amendments, it would be formally introduced to Parliament for them to vote on whether to pass it as legislation. The industry expectation at this time is that the law will probably be passed likely as proposed. So, what are the proposed changes? The exposure draft appears to enact the exclusion by adding gambling and tobacco activities to the existing list of activities that are excluded from being core R&D activities, as per the Income Tax Assessment Act 1997. Specifically, the exposure draft defines an excluded gambling activity as an activity that relates to a gambling service, gambling, or a gambling-like practice, unless the activity is covered by a subsection 3 relating to the harm minimisation purpose, which we'll talk through soon. The exposure draft defines an excluded tobacco activity as an activity that relates to tobacco, a tobacco product accessory, a vaping good, or tobacco extract, unless covered by subsection 3, the harm minimisation purpose. Already excluded activities include things like market research, prospecting or drilling for materials to discover deposits, management studies, or research in social sciences. The explanatory memorandum notes that activities related to gambling or tobacco are excluded from being R&D activities, both core R&D activities and supporting R&D activities. However, where these activities are conducted solely for the purpose of generating new knowledge about minimising harm, they remain eligible to receive support under the R&D tax incentive program. The harm minimisation exception is defined in the exposure draft as follows. For a gambling activity, an activity is covered by this subsection if the activity is conducted solely for the purpose of generating new knowledge about minimising harm from gambling services, gambling, or gambling-like practices in relation to a person or the Australian community. For a tobacco activity, an activity is covered by this subsection if the activity is conducted solely for the purpose of generating new knowledge about the therapeutic use of therapeutic goods for minimising harm from a thing mentioned in various subparagraphs, or generating new knowledge about ceasing the ingestion or transfer of nicotine into the human body. As mentioned, the reasoning behind the gambling and tobacco exclusion is to ensure public funds do not subsidise innovation that drives addiction or health risks. Hence, this exception means that activities conducted solely for the purpose of generating new knowledge about minimising harm, such as treatment of addiction, will remain eligible. The exposure draft included an example, shown here. The example clarifies that activities related to these excluded industries, even if not directly conducted by companies offering gambling services, would be subject to the exclusions. This example has Company A developing a real-time forecasting engine to improve predictions for sporting events during the 2025-26 income year. This forecasting software will consolidate interconnected data from various industry sectors in a novel way and deliver dynamic insights into win probabilities, as well as better targeted odds. Company A's R&D activities consist of experimental development of new algorithms and simulation technologies to power the new forecasting engine. Company A self-assesses that the outcome of the development process cannot be known or determined in advance. The activity follows a systematic progression of work, and the activity is conducted for the purpose of generating new knowledge, the typical test to determine core activity eligibility. The exposure draft notes that Company A would normally apply to register its R&D activities. However, as these R&D activities are related to gambling services, they are excluded from being core or supporting R&D activities. Company A has not demonstrated that its R&D activities were conducted for the sole purpose of generating new knowledge about minimising harm from gambling services. This case study highlights that it's not just gambling or tobacco companies that are excluded, but any companies undertaking activities related to gambling or tobacco. Consultation on the draft legislation was open until 30 January 2026. Now, after the consultation period has ended, the Treasury will review the feedback, potentially make changes to the draft, and then formally introduce the final version of the bill into Parliament. Companies that are conducting activities that are potentially subject to the exclusion should review their 2025-26 R&D pipelines and seek specialist advice regarding if, and if so how, their activities can be claimed. That concludes Swanson Reed's presentation on the exclusion of gambling and tobacco activities under the Research and Development Tax Incentive. If you have any questions about this presentation, please contact our office. Thanks for watching.